Hello and welcome to the road to the G20. Our journey today takes us here to Irene, just south of Pretoria. I'll be chatting to Dr. Rashad Cassim, who's the Deputy Governor of the Reserve Bank, talking about all things involving the G20 because the deputies have got together and they've been discussing all sorts of things that are facing the G20 nations. But should I say G19? Because the United States of America has got very angry with South Africa. The question is, will they actually come here in November? So lots to talk about. Talking about cross-border trading, talking about climate change, and of course, talking about tariffs as well. Let's go and speak to the Deputy Governor and find out what he's got to say. Dr. Rashad Cassim, thank you so much for joining us, Deputy Governor of the Reserve Bank. You look at the financial markets, also in charge of the international cluster as well. When looking at what's happening at the moment internationally, I'm talking about tariffs, I'm talking about the Donald Trump government imposing those tariffs on various countries, including South Africa. What is your take? It looks like it could be a rocky road going into the G20.
Well, if you're talking about the G20, it's a very difficult time. But one must remember that whenever you chair a G20 in the way South Africa is, there's always a volatile time. There's always a difficult time. So when India or Indonesia chaired the G20, you had the Russian-Ukraine war that continued when India was chairing. Then you had the Middle East conflict. So it's always, different presidencies deal with different challenges. So it's hard to forecast what will happen in November. We know that today in particular markets are not where they should be. But the G20 is a forum that tries to resolve global conflicts.
But there have been some successes as well. I'm talking about cross-border payments, and there has been a breakthrough with that. There's that. There's also climate change, but let's talk about cross-border payments.
The G20 has a span of issues. I, in particular, as the deputy with my co-director, co-deputy, which is the Director General of Treasury, deal with a very specific set of issues that are relevant to the finance track. And these issues, straddle debt. They straddle ways of engendering more global growth. They deal with financial stability. They deal with financial sector issues and as you say, cross-border. One of the interesting things about cross-border is that it's less political in a sense, because what it is, whatever the political situation, whether there's a political crisis, everyone wants to improve the efficiency of cross-border payments. So what that means, it means you want standards so that systems in different countries can speak to each other. So those kind of topics or themes lend themselves to progress, irrespective of whether you're in a very conducive political environment or a very difficult political environment.
And then there's climate change. Climate change may be a bit of a sticky point because we've had the United States who don't want to play ball with climate change.
There is remember that when South Africa took over, or when any country takes over the chairing of the G20, you're not inventing a new set of issues. It's kind of a relay match. You're taking over the baton from previous countries. So climate change is quite entrenched in the agenda of the G20 and surfaces in various discussions. There's a sustainable finance working track. There is in the financial sector issues, we ask what are climate issues in the financial sector. But it remains a contentious issue irrespective of what the position of the US is, for the simple reason that one of the main challenges is there just isn't enough resources to deal with the climate challenges. This is particularly relevant for developing countries and emerging markets. And the issue there really is that many of the emerging markets of the developing countries have not been major contributors to the climate problem, but yet don't have the resources to mitigate climate, to adapt to new climate. So the contentious issue is how do you mobilize resources, and what's the commitment of countries with rich resources to mobilize that? And so that gets discussed. And one particular issue is that although many countries are more or less see climate change as a global public problem, global public externality, as we say in our terminology, many of the countries, poor countries, would say, well, it's all well that you can provide some access to climate change mitigation, but we have a serious problem. Our problem is that, more than a third of our revenue goes to paying debt. So there's a debt crisis. So before we can do anything about climate change, these are the kind of issues that needs to be addressed. So what do we do as chair? We provide a forum. We steer discussions to say, can you solve the climate change problem when at least the continent which we care about has a serious debt issue? And so those are the kind of issues that come up from time to time.
And then having a look at cooperation between your fellow deputies. A couple of weeks ago, your deputies and yourself got together, but there was no joint communique. And I remember watching the governor and also the finance minister talking about that and saying there's no joint communique, but there are other channels as well which they are using.
So there's a big debate about what is the significance of coming out with a communique versus a chair summary, which we did. It's the latter of which we did. A communique basically indicates that there's consensus, that all countries are unanimous about certain issues that underpin the global economy. What a chair statement says is that actually there's no agreement, and that is but the chair's statement can be equally powerful, because what it tells you is that maybe one or two countries didn't agree, but the majority did agree on this issue. So we came out with it because we read the political environment. We attempted to do a communique. We found that there was national elections in several countries, some of which we knew a new government taking over. Positions were not clear. So we had to read the situation. And as we began the process of doing a communique, we realized very quickly it's not going to be viable, and we worked on a chair summary. But the chair summary is a pretty good indication of where there's consensus on many of the issues. No one is not committed to climate change, for example, but there are different ways in which people think it should be dealt with.
Looking at the United States now, there's concern it's going to be only the G19, not the G20. What sort of an impact will that have on the G20? Because you want to have the United States there. They're a major partner, a major player.
There are two critical issues as far as the United States is concerned, right? The one is that it is one of the biggest economies in the G20, and its role just in terms of its economic influence is critical. So, a G20 without the United States would be problematic. There's a second issue, and that is that they take over from us. So it is a very, very delicate time. Our experience in the deputies meeting was that the officials from the US were quite engaged in the meeting, obviously, at the time, there was no appointment of the Undersecretary for International, so we had an official who was perhaps more junior, but they engaged with us on all the issues. We trying to get a sense of what the American position is on a few issues. Some issues are, as we've spoken, relatively non-controversial. Others are more so. But I think it'll be a real pity if the U.S. Leaves the G20. There's no indication, certainly from where I set my vantage point. In the meetings we currently had, there's U.S. representation, so I don't think there are big issues from that point of view. The bigger political position of the summit, what will happen, that's above my pay grade.
Having a look at global inflation, and you're having a look at these tariffs, and as they get pushed from one country to the other, started of course by the United States, you may see global inflation climbing. Are you concerned about this?
If you look at the chair's summary that came out in the February meeting in Cape Town, we had made it very clear in the chair's summary that the global economy can only thrive if you have a rules-based trade system, and we specifically mention the importance of the World Trade Organization. And the head of the World Trade Organization participates very actively in the G20. So one of the issues that the G20 typically discusses is where is the conjuncture? And the current conjuncture does not look good if you're going to have a tariff war. It has two implications for South Africa. You know, as it currently stands, the most significant implication is the economy. We have tariffs imposed upon us. The last monetary policy statement did some scenarios of what we think a 25–30% tariffs will have on GDP. And so the economic implications are significant, but it also has tariffs matter more for the country who imposes it. So our inflation will not increase as a result of tariffs because we're not imposing the tariffs. The risk to us is if there's a tariff war and everyone's prices go up and we start importing, what we start importing increases. But you know, a tariff is a tax on consumers. As long as we don't impose the tariff, the implications for inflation are more benign. At this particular case, the implications for economic growth are very serious.
Deputy Governor of the Reserve Bank, Rashad Cassim, thank you so much for joining us on Business Day TV, and we'll see what happens as we head towards the G20 in November.
Thank you very much.
And that wraps up our time together. Over the next few weeks and months, we will be speaking to ambassadors, we will be speaking to leaders of business to find out what they think in this volatile time of tariffs and President Donald Trump. Until next time.